All right. Good morning, everyone. Welcome back. We got Joel Farrell from Strive for 25, and I'm a little thrown off because he was actually early today. So
How
kind of,
many minutes? How many minutes?
we were like 2 minutes early. So for like you, that's like 20 minutes, I guess, earlier on time or whatever you want to call it. But yeah, I
Mm-hmm.
was thrown off. I was
Mm-hmm.
like, saw this name come in ready to enter, and I was like, what the heck? But
Mm-hmm.
yeah, welcome back, man.
Appreciate it. Appreciate it.
Yeah, it's
Happy
it's
Friday.
fun. Yeah, Friday. Yeah, I got a sick kid, so we're kind of winging it right now. I didn't really prepare you well with the topics, but I kind
There's
of
so
want to.
much to talk about.
Yeah, there is, but I want to, especially my coworkers have been reaching out to kind of start the process of maybe investing or home ownership and starting to, see how much they qualified for. So I think that's kind of what I want to touch on is one of my coworkers was just kind of overwhelmed with the process of you know, how much documents and paperwork he needed. So for like a primary residence, people that come to you, would you say that majority of them are, they're prepared, like you ask for these documents, they have it, or even like what they qualify for? Are they kind of surprised a lot of times, you think, what they qualify for?
Okay, so there's a couple different pieces of that question, right? You have prepared for the process, and that's really kind of just who the person is. Do you have your Are you organized or not organized? But at the end of the day, there's only a couple differences when it comes to a primary residence versus an investor. Primary residence, it comes down to, hey, are you W-2'd or are you self-employed? Because if it's W-2 job, it's pretty simple. It's
Mhm.
W-2s, pay stubs, bank statements, photo ID. There may be some more things that we're going to ask for along the way. But if you're self-employed, we're going to be asking for tax returns, which then opens up a flood of potential other things and K-1s and business returns and bank statements and other things, profit and losses, and for the current year, there's more stuff that goes into it. So if you're if you're an investor, and let's say that you have one rental and you just bought it in the past year and it's not on your tax returns. um, I mean, we may not even ask for tax returns. We probably will, but we should be able to use a lease on that departure residence or the previous residence and then whatnot. So it's really, hey, if somebody's a full-time investor and they got multiple properties, we're going to ask for the tax returns, which, depending on how complex it is, I mean, can make it more challenging. But then for what people qualify for, you know, it's crazy because, someone says, hey, I want a payment in the 2000 range on a primary residence. Well, shoot. I mean, obviously a couple years back with rates lower, you're qualifying for prices, probably 300, 400, maybe, depending on the situation. Now it's like 200,000, 225 to get you under 2 grand. And again, I'm completely off the top of my head. So I think from a primary residence standpoint, people just aren't always aware of what these prices and rates are going to put them at in terms of payment. So a little bit of sticker shock on the opposite. Oh, shoot, I need to go to a lower price point. And then on the investor side, if you got the cash for down payment, say just say call it 25% plus reserves, like it is what it is, because we're going to use the projected rents for qualifying. So I think in that regard, people can be surprised of what they can qualify for, because if they have the cash, like, income ratios don't really, they do matter, but they may not matter as much because we're going to use the projected rents on the property.
True. You kind of touched on it, like being organized, but for people that are, their first time going through this process, I mean, I consider myself pretty organized, but even like the first time I went through it, I mean, you're kind of just caught off guard on how much things you have to present to the lender and what documents is required and all of that. So do you think, like, for a lot of people that come to you for business, are they kind of, like I said, even if they are organized, are they kind of caught off guard by how much things they have to
Yeah. I mean,
submit to you?
yeah. Yeah. Because if you've gone through the process before, then especially in the last few years, you're aware of like some of the little things that we ask for. So, like, just to give you an example, we're going to pull a credit report, right? And then on that credit report at the bottom, it's going to show how many inquiries in the last 120 days. So we're going to ask you to, if you have a couple of inquiries, and let's say that none of them turned into a new account, we're going to have you write on that paper, hey, nothing, no new accounts. Or, hey, if there was a new credit card or new whatever that was opened, now we're going to want to get some more information on that. So that's something that we'll do along the way. Another thing that we'll do is, especially if somebody works for a couple different companies over a 2-year span, we're going to have to go get verified the dates that you worked at the companies, because we have to verify 2-year history. So like we have to go out and get, a verification of employment and contact the employer or HR or whatever. And that's just more worker authorizations. Another thing this is probably the most common hurdle that I wouldn't say derails, but just causes chaos and delays, is verifying funds for closing. And there's so many little nuances that go into it. Like, let me give you the best case scenario. The absolute best case scenario is I've got a savings account with 50K in there and I only need 25K for closing. And the money just sitting there. There's no deposits, no withdrawals, the money just sitting there. That's the absolute simplest thing to possibly do to verify money. Now, the opposite of that would be, okay, I've got a checking account, I've got a savings account, I've got an account with another bank, and you have money that's going back and forth between accounts, transferring money back and forth. We have to verify, transfers and deposits and, large deposits and things like that. And especially if you have a business account that's intermingled in that, then you got businesses and personal. And so, and then if you're I shouldn't say borrowing, we can't let you use borrowed funds unless it's secured. But let's say you're going to be pulling money out of a 401k. We have to source that and the money going in, document the money going into your account and withdrawing it out of the account, and all those little things that come up along the way. So there's these little things that pop up along the way that we have to document. And a lot of times, we'll ask for certain things and all of a sudden we get it. And it's like, okay, well, now that I see this thing, now we have to get more things. So it's this domino of stuff that pops up. And if I sat there and said, hey, these are all the things to be aware of, it would take 2 hours to tell you all the things to be aware of. Right. So it's hard to be able to sometimes, predict or foreshadow what to be worried about or what not to do or what to do, because there's so many little things that come up.
Yeah, I think that's super important. And I think, even like talking to some of my coworkers and stuff, it's kind of like, you're trying to tell them, hey, go talk to, Joel, or talk to another lender in advance. Like, a lot of times they just think, oh yeah, I'm good. I qualify for this much and this
Mm-hmm.
and that. And it's kind of like now, like you're saying, during the process, little things pop up. And, that's why you want to start earlier, even before you even probably start really diving into what properties you're looking at or what market. But just talking to a lender to put yourself into better position to make the process a lot easier. And even for, like, us fire guys, our paychecks, I don't know if you've seen it yet, but we have like built-in overtime and things like that. So I know a lot of times lenders, if they see it and they're kind of like trying to figure out, like, okay, it's overtime, so is it guaranteed? How do I
Mm-hmm.
account for this? So a lot of times different lenders have a little bit of trouble at first, especially if, like they're in a different market, right? Like you're in St. Louis and we're in Hawaii. You may not be familiar with the pay stubs that we have. Whereas
Yeah.
a lender in Hawaii, they probably see maybe a lot of the fire guys' pay stubs. So they kind of have an idea how it's going to be
Yeah.
accounted for. So things
Yeah.
like that. So I think that's why it's always important to start the process a lot earlier and not just like, oh yeah, I make this much money, so I should be good, right? And I think I
Yeah.
hear that a lot.
I think that's such a good point. And I'll give you an extreme example. I have somebody that I know. I'm not going to name any names, but um, you know, they've got cash just sitting around, plenty enough cash, double, triple the cash that they want to be able to use to purchase a home, and they wanted to buy a primary residence, but they're self-employed, and I don't want to say arrogance or hubris, but just not really understanding how lending works. And part of this has to do with the fault of the realtor. So, you've got a client that's got lots of cash and, speaks very fluent in terms of just they have their stuff together. Hey, I'm good to go. I can buy this property cash. Let's go. Put an offer on a property. So the agent sends an offer on a property and they have a pre-approval for another company. And I don't even know how or what or what. And then they have issues getting the approval because their business income, they're writing everything off. So there's virtually no income. So then you have to flip to like a bank statement loan or something, alternative loans like that. And, if they would have had a conversation with the right person up front, they would have been able to know, hey, this is not going to be the way to go. And so they had that sticker shock of, hey, I think I'm going to get this rate, but then these alternative loans have a higher interest rate and more money down. And so anybody that's self-employed, or even if you have a side hustle, if you got a side hustle that's coming through as a side business on a Schedule C or Schedule E, it's going to be important to have a conversation up front before you do anything, because sometimes you have to include the tax returns into the profile. And if it's a negative number because your write-offs, like that could impact qualifying. So anybody that's got business income, like it's so important to be able to get stuff confirmed before you do anything. So because I've seen so many horror stories, unfortunately.
Yeah, I think that's the important thing. Like you're talking about is, I think there's a product pretty much for everyone. It's just, a lot of people don't realize that, right? Like people just, like I said, when I first started, I just thought you just walk to the neighborhood bank and drop off your papers, and that's, they'll tell you what you qualify for and what your rate's going to be. And as you're, talking about is, there's, bank statement loans, it depends if you're self-employed. So there's going to be a product out there for you probably, but also you have to be aware that, rates might be a little bit higher, there might be a little more restrictions, but there's probably a product out there for you to use. It's
Mm-hmm.
just, that's why it's important to be talking to different people in the field like yourself and, other lenders out there. But yeah, this was great. I like the information. Like I said, I think it's very eye-opening for a lot of people, especially when they first get started, whether it's investing or even the investing, right? You could have bought a primary home before and then you want to start investing. And then
Mm-hmm.
now you're shocked about all these different products that are out there. So, but before we go, and I just thought about it now while we were talking about it. But we all, for us, both of our channels and things like that, we talk about how kind of, you get caught up in the rat race and going to college and getting that W-2 and kind of heading down this traditional path. Do you think like, if you even look at like the lending world, right? Like you're talking about working at a certain job for how many years, or the consistency there, and even like how you look at a self-employed person or someone that has a business, a lot of these things make it harder to qualify for a primary residence in a sense. So it's almost like even the system itself is pushing you down this path to working one job for a long
Mm-hmm.
time, and
Yeah.
being a W-2 employee. So yeah, I don't know. I just was thinking about it as you were talking about all those things.
Mm-hmm. And I think part of the struggle is, when you own a business, right, then you can write things off and minimize your taxes. So it's like this trade-off, because you don't have to you don't have to claim those expenses, right?
Yeah.
Which then, if you don't claim the expenses, you could have higher income, which means you pay higher taxes. So if you pay higher taxes, right, then you can qualify for real estate. And if you buy real estate over and over and over, then there may be other tax breaks you can get, like a cost segregation, to be able to minimize your tax. So like tax planning, I mean, it's so complex.
Yeah.
But anyway, different rabbit hole.
No, yeah, I totally agree. It's just it's like a game, right? Like you're saying, some people, like you're saying, especially if you're towards the maybe end of your investing journey, or acquiring assets or building your portfolio, and yeah, you probably want to reduce the amount of taxes you have to pay as much as possible. But
Yeah.
like you're saying too, if you're trying to scale and grow still yet, you got to find that balance where you look lendable too, right?
Right.
You don't want to write too many things off, and now you don't look like you can be lendable too. So things like that. So like you're saying, it's a game, and that's why I think it's just important to always, like, we always go back to it, right? Talking to different people
Mm-hmm.
and hearing their strategies and stories, and what resonates with you. But yeah, this was
There's
fun, man. Oh yeah, go.
there's just one more thing I wanted to kind of circle back to about like expectations and kind of qualifying on the investment side. Because some of the people in our networks that have overlapped are people that are from either Hawaii or from, say, California or the West Coast, where prices are a lot higher than they would be, say, in the Midwest. And so the reverse sticker shock, like the conversation of like, oh my God, I had no idea I could go buy a $75,000 single family residence rental that's going to be decent enough to have good renters. Oh my God. Okay, cool. Like that reverse sticker shock. Like I had no idea this is possible. I could never have done this in California. Like that's what I've been seeing a little bit of more. And it's been pretty cool to see the kind of the lights open, that there's stuff that's possible. And in that same example of 75K, and again, I'm not telling anybody to do anything specific, but you could purchase a property for 250, for 150, a duplex, a single family. And I've seen a couple of people kind of, okay, this is my first one, so I'm going to scale down a little bit and just kind of get, less risk. Well, in terms of cash out of pocket, just a little bit of a lower price point of an entry. And so it's just been kind of interesting to see kind of people navigate these waters and figure out where they want to enter into the market. So there's just a lot of options out there.
Yeah, I totally agree, man. So thanks for showing up on time or actually early. I'll give you credit for that, but it's always fun. And, hopefully I'll give you more time next time for the topic, but we'll do
All
this
right.
again next week, man. Thanks,
See ya.
man. Okay, bye.